And joining me now as we start the first full week of trade in 2026 is Phil Rosen, co-founder of Opening Bell Daily. Phil, welcome to the show and Happy New Year.
Happy New Year. Thank you for having me.
Great to kick things off early this Monday morning. What's on your radar in 2026?
2026, all that news can wait. I think the big thing this weekend was Venezuela, the ousting of the dictator from President Trump. And to me, this is a sort of black swan event, but markets are still up this morning. And I think that's saying that markets are pricing the risk of having him out as a better bet than having him in, still as a dictator there. So to me, it's not as much of a geopolitical black swan event as maybe it would have been a couple years ago. And right now, markets are moving higher.
And oil stocks, we know those ones listed here on the NYSE, Exxon, Chevron, up about 3% and 6% respectively pre-market. How are you expecting the oil trade to get impacted by this when it comes to equities?
Yeah, I think the stock market, as far as the oil companies are concerned, those could do very well in the coming months if the U.S. secure some concessions in Venezuela for these specific oil giants. And I don't know if that's going to happen. I have no idea what the administration is planning for, but Trump seems to be very interested in taking over the oil capacity and oil reserves of Venezuela. And I'm sure that the biggest players in the U.S. will have a vested interest in making that happen. But the way I see it, there are a couple ways this Venezuela takeover can pan out as far as the investment perspective. You have a sort of just a oil concession scenario where the only winners are the U.S. oil giants, and the actual economy in Venezuela pretty much stays status quo and nothing changes that much. I think that's one scenario. A second scenario I'll be looking at is sort of a partial reopening of the Venezuela economy, and that would still benefit the oil giants. But then on the other hand, there would probably be more of a fixing of the economic plumbing in Venezuela. So the financials and the credit lines could start to reopen in Venezuela. And then the third scenario that I'm going to be looking for is sort of a full reopening and a real US-backed restructuring plan in the country. And that would start to expand into, let's say, agriculture, business, infrastructure. And then you have a much wider spread rebound in Venezuela, and I think that helps Latin America's stocks more broadly.
And it is interesting, I was reading over the weekend amid this news that even though Venezuela is rich in oil, it still does only account for about 1% of global output. So something we'll be watching, I think, certainly in the days ahead. It's interesting as we are kicking off the first full trading week of 2026. It seems like, based on early investor action, that what worked in 2025 is set to remain working in 2026. What do you think?
Yeah, I don't see the AI trade slowing down. I think that was the theme of 2025. And all the investors I'm speaking with right now and writing about in my newsletter, they're very bullish, and I don't think that earnings will slow down. I don't think that all of Wall Street strategists anticipate a slowdown in earnings, specifically in the tech trade. And if you look at the demand for these AI products, the chips, if you look at what NVIDIA is saying and these other giants, no one is expecting demand to slow down. And the bottleneck here is actually they're trying to keep up with how much people want the new technology and these AI products. So to me, we're not close to, let's say, the top of this trade. And I do think that the AI cycle has plenty of room to run.
Yeah, so we'll be following these AI names. Some of our guests, Phil, have said, though, that they anticipate winners and losers in this space. Do you see a bifurcation happening in 2026?
You know, the interesting thing about last year, as big as the AI trade was, I believe only two of the Magnificent Seven actually beat the S&P 500, about 16.5%, and that was Google and NVIDIA. So I expect those two to keep winning. The rest are a toss-up. I mean, Amazon could see a pickup. I think that's an interesting play because of how much they're automating in their factories, and I think there could be a big catch-up play in Amazon this year. But otherwise, I do think Google and NVIDIA are going to continue to be the dominant players. I'm not going to be looking for a separation in those two, because I think if the AI trade is what we think it is, or what the bulls think it is, both those companies are going to do so well, it's not going to be worth our time to compare who's winning the AI trade.
Yeah. So I do want to talk about the outlook for international names, right? We started by speaking about Venezuela in terms of your outlook for Latin America, but broadly international markets too. What is that?
So there's one ETF I'm watching right now, particularly with the Venezuela news, and it's the iShares Latin America 40 ETF. And importantly, This ETF does not include Venezuela, and it was up 45% in 2025. But the thing that I'm watching now is if that momentum continues because of a spillover positive effect of more stability in Venezuela. So if all the neighboring countries suddenly have less risk attached to Venezuela, they could continue to do very well. And we've also seen in the last year, currencies in Latin America have appreciated against the US dollar, which has fallen double digits in the last year or so. So that's another tailwind for Latin America stocks. And then if we see the sort of the US infrastructure support in Venezuela, that could do very well for financials in this ETF. That could be good for materials, energy names, and all of that I think sets up a very interesting play watching this ETF. And it's up 45% in a year already. So I do think that if the bulls are right on Venezuela, that could be matched or extended this year.
Phil Rosen, co-founder of Opening Bell Daily, joining us in studio at the Stock Exchange. Phil, thanks again.
Thank you for having me.
Great to have you.